right, welcome back. We made it. It's been a little while since we've had our last episode, and we've got a special guest on here today. We've got Ben Werkman with us, and this is a new era of Quant Bros. So we are going to start having some interviews with people, start getting a different perspective on MicroStrategy, bringing in some alternative analysis, start to think about some people that are actually professionals in other spaces, so we can start to talk about decentralized IDs. Like, what is MicroStrategy Orange? How does that play into things? So we are going to cover a handful of topics here. Ben is a wealth of knowledge. I think we'll have a really fun conversation. We'll hit on a couple things. We're going to obviously hit the MicroStrategy multiple on NAV, which is just fun to talk about. I mean, a lot has happened in the last month, right? We've got MicroStrategy World has happened, Q1 earnings, which didn't have FASB. You've got MetaPlanet is adopting the MicroStrategy strategy. You've got the Japanese yen falling off a cliff. I mean, the GameStop frenzy, the political environment with SAB 121 and this new bill. We've got Ethereum ETF getting approved today. It's just been a total frenzy. It's been a month, but it's felt like 3 years in just a month. So without further ado, I think we'll kick it over to Ben for a little bit of an intro, and then we can just start jumping into topics.
Awesome. Well, I appreciate it, guys. I've got a big seat to fill here, being the inaugural guest here on Quant Bros. So
Yeah.
I'm honored to be selected. This is going to be a lot of fun, but I'll give everyone just a little bit of background on who I am, since I'm the new face on here. Also a MicroStrategy bull. I'm guessing people probably didn't know that about me by now. But my professional life, I've kind of had a little bit of a zigzaggy pattern here. I came out of college originally and started out actually in commercial banking, right? So I was on the other side of the finance coin here. After the economy had already collapsed and all the banks were struggling and failing, that was when I decided to enter banking, which was a little bit of an exciting time to be there. So I started out working for a regional bank doing commercial workout analysis. I was one of the credit analysts originally in that group as we were trying to, protect the assets of the bank, right? Go and recollect the collateral, find new ways that we could underwrite these loans to make sure that they could make the payments as long as possible, right? So it was a very interesting time to step in there, and honestly, it gave me a little bit of a different perspective when it comes to risk management, because I came out in the ultimate of risk situations when everything had started failing, financial system had collapsed. It was a real interesting time to enter banking. So I started as a very, very conservative investor, and I still think I am, right? I still think I'm in the most conservative investments on the planet. So I know there's big groups of people that disagree with that, but that's my feeling on Bitcoin. But once I left banking,
so you entered into the financial world, and banks were failing, financial crisis, and so I mean that's perfect. I mean you have felt the reason that Bitcoin was created. You've felt it firsthand. You've been able to see how banks have reacted and how they tried to manage their risk and manage their way out of that situation. And you probably saw multiple points of failure and areas for potential opportunity and growth, which is amazing. A fascinating point of view. Keep going. Sorry.
Yeah, it was huge, and it shaped a lot of my thoughts, particularly in the Bitcoin space here as well. But what you found early on was people got really loose with letting money out the door, right? The underwriting requirements were not very stringent. The assets that banks were lending against, right, really weren't good collateral, right? And particularly after collapse happens and then those collateral values fall out from under it, it was a real interesting time, because you're in a bank that's on the verge. All of them were, right? Ours was no different. And so we made it through. It was a good experience to be in, because I was there during the heat of it while we were, you probably had 30% of the loans on the book were non-performing, right? No money coming in the door, and the rest were all strained. So it was a really interesting time to enter the finance world and start looking at, how did they make the decision to lend in that environment the first time? And then how do you prevent it when we come out the other side of this? So it was an interesting and rather formative part of my views on risk tolerance. So it was a good experience. I enjoyed it. But once I was done with that, once we came out the other side, right, kind of that excitement had died down a little bit of, being in the mission where you're trying to really stabilize and save the bank. So I went and decided to take another path. And I joined one of the big four accounting firms in their consulting arm. And when I joined there, what I was actually moving into was really more of a software play. And they were looking at building a center in the city that I'm in where they wanted to build out a managed service offering for contract management, where we would essentially do the government work for a lot of these large outsourcing contracts, right? A lot of the infrastructure outsourcing agreements that you have with companies like IBM or Accenture, or the application development contracts. So we were building a platform and building all the processes in place to put that governance in place to make sure that, all the conditions that are in the contract are met, that every time we're owed some type of a report, it was given, right? It was an interesting and very new area to move into. And the accounting firms are also very risk adverse, right? I mean, they're the ones reviewing the financials, putting out the audits, but the consulting side, we get that same influence on us when I was there. So we had to build that into all of our products. And it was part of the reason that the customers trusted and would come to us. So I spent the first couple of years working on that product, launching it, running those accounts. And then I ventured out into the IT strategy world, and particularly in the IT outsourcing portion of our business, which was another really interesting one because, like we're seeing now with the emergence of AI, while I was doing it was really when cloud computing was becoming huge. So everyone was shifting from all these structures where they had all their infrastructure on premise and everyone wanted to build everything on premise. And all of a sudden, AWS and Google Cloud and all these major players were just taking over the market. And people were starting to realize that, they might not be more secure than some of these big players. And they were starting to let go of the reins a little bit. So when we were looking at, how do you make that transition from, I have to manage everything myself to how do we kind of let go and let the people that focus on this 24 hours a day take the reins, it's a tough shift, particularly in some of the industries like financial services, where, all their data is very, it's got to be very secure, right? Your security requirements are crazy. You can't afford a leak. And so it was an interesting space to play in there. And so I did that for several years. And then kind of my last tour in the corporate world was I went and worked at a SaaS startup where we were building a contract lifecycle management. So it kind of tapped into what I originally did when I joined the Big Four, except now I was doing it in a startup environment where we were actually building out AI products where you could take in, thousands of pages of contracts, and then we had AI that would go in and analyze the contracts and draw out all the different provisions that were relevant to, different components of the business, and would set up the governance structures for signatures and changes and make sure that the management of those was done effectively, which ended up being a really exploding area that a lot of companies were investing in, and you had several unicorns come out of that space. So it was a very fast-paced world to live in. The software development world is, particularly when you're trying to push new products out to market before the rest of your competitors there. So kind of an interesting career from that perspective. But then COVID hit, and I decided that that was kind of the time where I was going to jump out and I was going to venture and I was going to try to get something going on my own. So I actually left and started picking up an entirely new skill set, right? Most of my original work was a lot of process design, financial modeling. And then I decided, I'm going to step into the software development space and I'm going to learn how to code so that I can start building my own products. And investing was really one of the main areas where I'd spent a lot of time. I grew up in a household that was focused around investing. My dad was a financial advisor. And so I'd always kind of lived in that world. But while I was working, I was always trading on the side, right? You can't stay away from it. You guys know. And so
addicting. It's addicting.
it is. It's that surge we all need, right? And so I was always doing it on the side. And so I originally started just saying, if nothing else, maybe I can automate my own strategies, right? So that I can just not have to stare at these charts all day. I had setups I was looking for. So I thought maybe I can just use it just to execute my own trades. And it started that way, right? And you got to redevelop everything 10 times because the first time you make it work, you think you're a genius. And then 1 week later, you find out that it was some of the worst code you've ever written. So you got to start over and rebuild it 10 times. And so from there, once I really got it running and really actually started to learn what I was doing in that space, I decided I'd start building a platform that I could launch for retail customers. So it's not out yet. It's still in the development and testing phases at the moment, but that's kind of the path that I went down. I decided to go more into the software route, which brought me back more into the Bitcoin space, right? I'd put out before on Twitter, kind of my story as it pertained to Bitcoin, right? I think everyone has one and they're always very interesting, but I was actually pretty early, not nearly aggressive enough, but I bought my first Bitcoin, I think it was 2012 when they were $264, right? And so I'd love to be here with one of those stories where, I bought a ton of it and sat on it and never sold. But, back in those days when I was just out of college, I thought $1,000 was all the money in the world. So didn't hold on to it, but traded in and out of it for a while, which is kind of where you start to get your exposure. And then over time built that conviction and, really went deep. And that's what brought us here today. So here we are.
Perfect. I mean, that's an amazing background. You've got traditional finance, big bank. You've got consulting, big four accounting. You've got IT outsourcing and software as a service, and then touching AI and getting into Bitcoin. I'm so excited you've decided to take this leap from anonymous out into the world. You're going to have such an exciting Bitcoin journey, and I'm excited for you and excited for us. I just got back from this Bitcoin is for Everyone conference down in Portland, and it was such an exciting group of hopeful people and that are excited and hungry for the future and developing on a Bitcoin network. So excited for you. This is cool. We're super happy to have you on, and glad that we've built a relationship and some good banter on Twitter X platform, and thankful that we've got this platform to have these conversations. So
you never know who you're going to meet. It's a great place to be.
Yeah, it's great. It's great. So perfect. That's a great intro. Appreciate that. We're going to jump in. We're going to do a quick update on multiple on NAV and where we're at today. I'm going to share my screen, and then we will just jump into some other topics and we'll go from there. How's that sound?
It's perfect.
That'll work.
Good. Okay. All right. So what we've got on the screen here, this is the Bitcoin price as of Thursday night. What's today? May 23rd. We've got Bitcoin is at 67,782. MicroStrategy closed at $1,554. MicroStrategy owns 214,400 Bitcoin. Hopefully they will be making a purchase maybe at the end of this month with some cash flow. So maybe that will increase over the next couple of days. Current liabilities are fixed on the balance sheet. I haven't updated this since the end of Q1. Maybe this needs to be updated a little bit, but it's close enough for government work. We got 2.79 billion of liabilities. These are fixed. So a net asset value of around $12 billion. The publicly available float, or the shares outstanding for MicroStrategy, is 17.74 million. If you take the share price 1,544 times the shares outstanding 17.7 million, you get 27.4-ish billion. So today MicroStrategy is trading at a 2.2 times multiple of net assets. Over on the right hand side, you can see at these different Bitcoin prices, using the same multiple today, what kind of MicroStrategy price does that get us to? If you're looking at a $125,000 Bitcoin, that gets you to around a $3,000 MicroStrategy price. If you're looking at a $275,000 Bitcoin, that gets you around to a $7,000 MicroStrategy price. And looking a bit further down, in the last trading peak, in the last epoch for Bitcoin, MicroStrategy hit a 6 times multiple on net asset value during the bull run. This was, I want to say February. I think it was about February of 2021.
Yeah, 2021 was the top.
Yeah, February 2021. And it was trading at a 6 times multiple. So if you take that 6 times multiple and you look at these different Bitcoin prices ranging from 125,000 up to 275,000, you can see that the compression on the remaining shares results in a much higher MicroStrategy price, ranging from, in these examples, 8,000 up to $19,000 MicroStrategy price. So a lot of people, Go ahead, Ben.
I think every time anybody sees that, I know this is really kind of what kicked off the punter Jeff as a mega bull. But every time you see that, your initial feeling is always, I never owned enough, right? And with
Yeah.
everything else that's at play, right? Because the only thing that's really at play in that analysis being the Bitcoin price moving, right? It ignores all the other components of the business, which I
Right.
think is something that's really going to shock people, right? If the upside's already there just on the asset that they chose to back themselves with, the expansion of their capabilities is going to be a whole different thing. So it's an exciting time.
Right. And you start to think about like, what is a stock? And this is what I always come back to. What is a stock? What is an equity? How do you value any equity? And you know what, it might be worth going to this. And this is dated, so this is not up to date, but this is from the very first episode that we put together. I pulled together the top 20 equities. And again, there's no homogeneous characteristic among the top 20 equities, right? If you look at PE ratios, they all vary widely, anywhere from 5 to 123. I'm sure this is very different now today. Multiples on net asset value also vary widely. You're looking at anywhere from 1 up to high 60s with an average of 8. And MicroStrategy is currently trading at 2. And if you look at liabilities to asset ratios, all of these are also vastly different. So it really kind of boils down to what is the financial strength of MicroStrategy, or what is the financial strength of any of these companies based on the assets that they're holding and how productive those assets can be and how long into the future can they carry that competitive advantage. If we look at what's happened with NVIDIA the last couple of months, I mean, people are realizing that they have a competitive advantage and they are ahead of every other supercomputer chip maker in the entire world. And they're probably going to be ahead for the next 30 years. And so if you start to think about, how forward looking are you on equities? And you can argue that many of the top equities are 10, 15 years forward looking. And if you're 10, 15 years forward looking on MicroStrategy, you have to think about what is the Bitcoin price 10 to 15 years from now? And what are the revenue opportunities on leveraging the Bitcoin and the development of the Bitcoin ecosystem over the next 10 to 15 years? And if you start to think about the scale, right? People always ask me, like, where do you think the price is going? I have no idea where the price of MicroStrategy is going, but it's a spectrum, right? It's a function of how much compression is there on all of the shares outstanding, right? Because a stock is valued as what's trading at the margin. So if they get added to these indices, MSCI, QQQ, S&P 500, the remaining shares available that are liquid shrinks drastically, which can result in a lot of volatility and potentially face ripping, face melting upside price discovery, and also face melting downside volatility. So, and looking at a spectrum like this that you can see on this screen, I've got Bitcoin price up in the top and different multiples on the left-hand side of net asset value ranging from 2.5 to 40. And you can see that the spectrum of what the price of the stock may be can range from, $1,900 to 1,000 or, $185,000. At $185,000, that would be a $3 trillion market cap, which would make them the number one publicly traded equity in the entire market. So it's a spectrum. Stocks are forward looking. How forward looking is MicroStrategy right now? And I think it's, in my mind, again, none of this is financial advice, but this is probably, like, in my mind, I think it's undervalued, and I will continue to be buying until it gets to, the number one publicly traded equity, probably.
I think people are getting a sense for some of this too, particularly the groups that are watching a lot of the Bitcoin miners and the movements and some of those where they're looking at, you've got two different factions in the Bitcoin miners, right? You have the companies that are long Bitcoin and you have the companies that are long energy that mine Bitcoin, right? They're two very different things, right? One's going to have that HODL strategy with their Bitcoin. The other one's selling out of everything because they're trying to fund their growth and expand their energy capacity. And what you started to see, particularly in the last week, is that because of all of this, I'll say it's hype, but it's real, right? All of these plays in high performance compute and AI and all these companies coming out and investing in AI products, what you started to see was all these miners that were trading near or around their book value start to expand, right? No new revenues come in the door yet, but it started to expand. And you kind of look at it like with options contracts where you have your intrinsic and your extrinsic value to those options contracts, right? When they're trading around the book value, nobody's seeing any of that extrinsic value coming in the door. But as soon as they start to get a glimpse of that, and you're looking out at what the market's demanding, it starts to change that narrative pretty fast. And I think you're going to see something similar here with MicroStrategy that we saw with a company like Iron, right? Or Wolf, or one of the ones that are long energy, where everyone was mad that they didn't have a HODL strategy, right? And I'm a big fan of the HODL strategy, but I also understand that there's a separate side to that business. And some of these may be using Bitcoin as kind of an interim approach to build that capacity to support whatever the next thing is. And now that people are seeing some of those plays out there, you're starting to see that expansion well away from book value, right? That's probably going to keep going here for a little bit because in the AI world, energy is the one constraint that they're going to run into that can really grind that thing to a halt. So MicroStrategy, I think, is going to be something similar where we're looking at this NAV and people say, well, at 2x, it's way overvalued, right? It's the thesis a lot of people have had. It should trade at 1x NAV. Well, that's very short-sighted, and people can only take that approach until something comes out that says otherwise. And to me, part of that was the acceptance into the ETFs. That was a big move, right? When you start to get acceptance of an asset that you've based the underlying value of your organization onto Wall Street, right? Front and center, best performing ETFs that have ever been launched out there.
Ever.
That's one move, ever. Right? Ever. That's one move, right? And then everyone else is saying, well, it's a zombie business. The BI business doesn't grow. Well, that's been the past, but, don't look now. Their media cycles are starting to pick up. They're a very interesting company now. And when they pivot, which they've already done, right? They rebranded themselves proactively saying, we're a Bitcoin development company now. That's kind of an open question out in the market right now. What does that mean?
What is a Bitcoin development company?
What is a Bitcoin development company, right? So I don't think that we can even yet comprehend the scale of what potential solutions coming out of that portion of the business are. They've got a core portion of their business now that throws off cash flow, right? Nobody wants to give it any credit, but it does throw off good cash flow. And it's part of the reason they've been able to continue to do these convertible debt offerings is because they do have the cash flow where they can continue to service the interest payments on those, which gives them that expansion of, collecting the most valuable asset in the world, in most of our opinion, right? That are going to be on this show or watching this show, right? Got a lot of like minds here, but that's our view. And that's the market's starting to wake up to that as you're seeing some of these other currency collapses happening. So how you value that forward looking is going to be a problem that people are going to have to solve for, right? And it's either that or you're going to quickly watch this thing run away from you. And you're going to have that I missed out moment that, a lot of us have had before, right? It's not uncommon in investing, but here it's just so new and so unique that I think that watching this NAV and watching how the multiple moves on it here in the upcoming months and throughout the rest of the year is going to be just fascinating to watch. If it expands beyond prior cycles because of where we're at and because of the broader acceptance, or whether we're going to stay in that same range, we won't know. And it won't matter either way, right? Really, because if it traded at one time and Bitcoin does what people think it's going to do, they're still undervalued in the long run, right? So we'll see where it goes. It'll be interesting.
Right. I think you bring up a couple fascinating and really, really interesting points. And, at this Bitcoin is for Everyone conference in Portland, I kind of caught this message or this theme through a couple of the different presentations. This space moves incredibly fast. Technology moves incredibly fast, and people are building on this network way faster than I can literally comprehend. And, I feel like I'm kind of at the forefront of what's going on here. And it's going to surprise the heck out of most of the world how fast this stuff is moving. Michael Saylor famously said, all your models are broken. And the theme that I really took out of this Bitcoin for everyone is that like reality is shattered. Like the reality that you know today needs to be shattered because the world's being recreated from ground zero, and it's going to look different in the next 20 years than it looks today because of how capable this technology is of generating community networks, like separate individual decentralized networks that can operate together and decentralized without having a third-party entity like a bank. And it's made me kind of rethink my whole world, right? Like even I'm hopeful for the idea that my community here in the Pacific Northwest can be a little bit more community focused and less like having a bank intermediary. Like I can establish a relationship with my butcher and my baker, my bakery, and eventually we'll start transacting on this new network on a side chain that's separate without having an intermediary, as opposed to just being a transactional world. And this kind of notion of shattering your reality, you kind of have to adopt it because Bitcoin is very flexible and can be very creative in what it looks like. So I think this is a really good segue. Ryan, if you've got anything to add on that front.
Yeah, I think going back to one of the things that you and Ben have talked about, the multiple of net asset value, right? Like this, I would just say I do not think that this is such a thing that we should think about in like a linear, balanced, and symmetrical sense, if you know what I mean.
Shout out Cole Tenold, who's put together the dot plot.
Yeah, I mean, I've had that dot plot up like several times, and it's like jaw-dropping to think about like future projections just based off that visual of the way like the second derivative like linear regression curve goes. It's unbelievable. But I think that there's just this general understanding out there within broader traditional finance, like meaning Goldman Sachs, JP Morgan, all the banks, most of the hedge funds, most of the financial advisors, most of the RIAs, right? Like most of the investor community thinks that there should be this like concept or notion of like equilibrium, meaning MicroStrategy is allowed to trade from 0.95% multiple of net asset value to 1.05 or 105% multiple of net asset value, but it has to be this super tight range because like that's the value that's projected. That is the future facing value, and that is just so unbelievably incorrect to my understanding of the world and to my understanding of how asset prices move, especially in the quantitative easing era that we're all in right now, whether we know it or not. The past 15, 16 years since 2008, where there's been this hyperactive Fed, it kind of gives one reason to believe that like the most like volatile and the most valuable, interesting how those words almost sound like the same, volatile and valuable, but the most volatile and valuable assets, they're going to move around the most and they're going to end up going up the most. But in that period, there's going to be like massive ups and downs. And to think that we can just grade this stuff off of like a multiple of net asset value and just look at that alone, I think is really obscene if we're leaving out the fact that, if you look at the global public company hodler list, not just the American list, the planet Earth global public company hodler list of Bitcoin, number 2 to number 38, MicroStrategy has more than them. MicroStrategy is number 1, right? And number 2 to 38, MicroStrategy has more than them. I think perhaps 2 times is more than them. I'm forgetting the numbers right now because I'm off screen, but you get what I'm saying. It's like if we overlook those things, it was just like I was saying on LinkedIn, and I'm gonna pass it back to Jeff here in a second. I was telling someone on LinkedIn, like, look, the reason that gold went up by a factor of 23 in the 1970s is because America went off the gold standard. If people were looking at like TA, because we were talking about like technical analysis and that sort of stuff, if people were looking at TA, they would have missed that stuff completely. You know what I mean?
Right.
If they were not studying the catalysts and events and information of the world as it was in that moment, they would have missed that 23x completely in gold. Similar to how I feel like people are going to end up like missing this trade or pretending they never cared about it or whatever excuse people want to add to that list. Because I think they just think in this like linear fashion, right? Like they think like that finance is like you take a bowling ball down the bowling lane, you got both bumpers open, and you just slam it as hard as you can into the left side, and then every move is symmetrical and balanced off the bumpers from there. I think that's how people think life is. But that is absolutely not how life is, right? Like life is not balanced. It is asymmetrical moves in both sides and uncertain, unknown periods of time that you're going to be in like those lower parts of the curve or even the upper parts of the curve. But anyway, that's a long tangent. Let me pass it back to Jeff.
Yeah.
Well, one thing just before we go back, right? I mean, there's another thing that people have to try to figure out how to price in, which is that whole non-sovereign aspect of Bitcoin. If you look globally at the macro environment and all these currencies that are collapsing all around the world, right, you're also starting to see the consolidation of currencies all around the world. So, for instance, the US dollar being the main currency, the reserve currency in the world where commodities are trading back and forth. You've got, I can't remember the exact number, it's somewhere between 60 and 80 countries that have pegged their currency to the US dollar from a value, right? So say you go down to the Cayman Islands and their currency, the Cayman dollar, is pegged at 1.25 of the US dollar, right? So you've got another group of those. You've got 15 or 16 countries that have completely abandoned their own currencies and used the US dollar as their currency. And then with Russia and Ukraine, all of a sudden you saw SWIFT and the US dollar get weaponized on the world stage. And that opens up this huge conundrum for countries, right? And I don't think we've seen the impact of that yet, except for the fact that you've got the formation of all these other powers in the world forming BRICS. And what did they just announce? They just announced that they're working on putting together one central currency that, are, at least as of now, they're planning to back with gold, right? So you're starting to see this shift, this faction in the world, and that's going to impact the global trade markets.
Right.
Where all of a sudden, what currency can you back anymore? They're all becoming so fluid. Look at the euro, right? Back in the early 2000s, you had all these collapsing currencies in Europe and they consolidated into the euro and they tried to stabilize it there, right? So in order to stop the bleeding out of all these currencies, essentially there's a reset. And it's either the consolidation of currencies or the worst case is it ends with wars, which can end with, resets in currencies. But now you've got the third largest economy in the world and their currency is inflating now, right? Japan's starting to run away. And there's really no way for them to put that genie back in the bottle at the moment, other than, they're going to try to stabilize it in the near term by offloading their treasuries, of which they used to have a little bit over $1 trillion, I think, was the number. And so they're going to have to offload those. But that's a Band-Aid, right? And everybody knows that.
So
in the US being the strongest, just one sec, the US being the strongest, now we've got our own debt problems, right? I mean, we're spiraling our interest out of control. So if you can't even count on the main currency of the world superpower to be remotely stable now, what are you going to depend on? And this is a question for out in the future, obviously, but it's one of the ways where you look at something like Bitcoin and go, if you've got a digital asset now that's truly non-sovereign, right? It's not beholden to any of these nations. There's none of the games that they can play with the currency to play with the valuations and do any of that. How do you start to value that, right? I mean, that's a tough one to put a number to. And things are going to have to get a lot worse before we find out, unfortunately, because everyone, we're all optimists and we want to think people are going to figure it out, right? The leaders, we like to think we've got all smart people running the show, but we're in the fool me once, fool me twice. Now we've been fooled 10,000 times, right? I don't know where we're at anymore. So you've got to start going, I'm going to protect me. And that's what I think a lot of us did when we found Bitcoin. You're going, it's going to be volatile. It's going to get attacked. There's going to be FUD, right? There's going to be all these things that impact it. But I'm looking around going, none of this looks good either. It's time to start looking out for me and protecting the value I've created in my life. And that's why you start moving in this direction. And now you've got MicroStrategy that's taken that at a corporation perspective, which is different. And El Salvador did something similar at a nation state level, which opens them up. If this becomes a real global trade play, people are going to be stunned by how quickly that jumps El Salvador up the list. Just that small head start. So sorry, Ryan, I also went on a tangent, but I think it's an important factor at play. We're looking at it from the perspective of a company and a stock, but the asset that we're debating that everyone's trying to put, at net asset value, which fine, but you can't ignore the macro picture in the world and the direction it's been going for decades now, right? It doesn't turn on a dime. And people are starting to do the math and going, this thing's spiraling out of control. We can print money, but we can't generate the economic benefit to offset that. So we just keep accumulating debt. It doesn't go anywhere great. So eventually you opt out and you go, not with my money, right? You're not going to play these games with my money. So you move into something that you don't have to trust. You can verify, right? There's been clips going around Twitter about Bitcoin being a currency of distrust, right? And that's right. It is, right? Because you no longer have to trust, you get to verify. And that is as sure of a thing as you can get in today's day and age with everything happening behind the scenes. So I think it's one of those things that just makes this such a unique play that you almost can't allow yourself to stay away from it anymore, right? I mean,
right. Your opportunity cost of capital is so high.
Huge.
Like where do you put assets right now? And you would be insane to not think about the risk associated with the US dollar and the opportunity of cost of capital that the entire market has, not just the US market, you're saying, the entire global marketplace. And so I've got a couple of follow-ups based on that. That was an amazing summary that you've got there. I just watched Jeff Booth do this presentation, and he summarized, I think globally there's $900 trillion globally. I think that was the number he used. And there's $400 trillion of debt. And so basically the globe is insolvent. So if you're to take, just for representation purposes, if you're to take $900 trillion and divide by 21 million, I think the Bitcoin price is like 43 million per Bitcoin. Now, but 900 trillion is unsustainable. And how do you pay for the debt? You inflate the currency. So he's like 8 years from now, it's going to be 2 quadrillion. And, if you start to think about the base effect of like those numbers and how you get there, I think, yeah, that honestly sounds decently rational. And then all of a sudden you're looking at $120 million Bitcoin price based on just the global dollars that are out there. So,
well, that's even optimistic, right? You got to scratch under the surface of derivatives contracts and the notional value under those, right?
yeah,
I can't remember the exact number, but it was either like 4.8 or 5.2 quadrillion dollars in notional value of derivatives contracts.
oh my God.
Like there's just this, it never gets better when you start digging into these things, right? But just looking at the debt markets and the amount of actual currency out there, yeah, I mean, it becomes very clear that there's a problem. Yeah,
Right.
sorry, Ryan.
Go ahead, Ryan.
Yeah, and Jeff, this kind of goes back to what we talked about. I don't know if this was us on the phone or us talking on a podcast before, but about the base effect math of global assets and the current like US money supply, right? Nvidia right now today, I believe as of right now, $2.6 trillion. If they 10x from here, they kind of match the M2 money supply at what I believe to be is $22 trillion. And don't crush me if I'm wrong by a little bit on that, but you see the point, right? Where
Yeah.
like
Yep.
the base effect math starts to work against you. The reason I bring this up, and the only real point I want to say here, and then I'm about to pass it back, is that I think those numbers are going higher, right? Like I was looking for that $900 trillion chart. I've seen it in both like square, rectangular form, like Sailor shared it at MSTR World, and I've seen it in pie chart form. I've been looking for that chart because I want to get a good like long form post going on this, in the sense that like the bullish idea for like Bitcoin or MicroStrategy is not that it's gonna like, you know, fill into these gaps that are already existing today. It's that like that $900 trillion of global assets is going higher, right? Materially higher. American debt is going materially higher. The interest on the national debt higher. The S&P 500 higher. You know what I mean? Like
Yeah.
that's like my perspective on this. Like we can look at this, of course, like right now, you know what I mean? Bitcoin's at 1.1 trillion, let's say. MicroStrategy's at 28 billion, let's say. And we can look at that rectangular chart of the 900 trillion, and we can see where certain things fit in. But for me, like the reality of life is that 900 trillion is going to smash up higher on the
Yeah.
y-axis, because if it doesn't, then the world kind of ends. Like the world, like global economy kind of like blows up, absent that number not going higher year over year. But that's just my perspective on that.
Yeah. I mean, number go up, right? Number go up technology. It's you've got 21 million. It's pretty simple, right? Like, I
It's
think
going
somebody
up
said,
forever, Laura. It's going
yeah,
up forever.
But like you see what I mean, Jeff? Like the governments like have to spend more money.
yeah,
You know what I mean? Like the GDP like has to go higher. Like Apple Computer has an incentive to like grow revenues higher, to like send, you know, a US GDP higher and global GDP higher, and the value of homes, real estate in America globally higher. You know what I mean? That's what like keeps like sending that number up. So like I was saying, like we can look at what should MicroStrategy be valued at today? And this is where the bears come in heavy about like they should be valued at this level or this level or this level. It's such nonsense, because everyone has a different time horizon. You have some short-term traders, you have some bears, but then you have some bulls who are down to hold this thing for 10, 20, 30 years.
yeah,
So they actually don't care about this short time stuff. But these folks come in with these short term, with these like, you know, macro points, or that $900 trillion like slide I was talking about, and they'd be like, oh, well, it can only go up this high. It's like, well, actually everything else can go up a lot higher.
yeah.
And
You
that's
know,
just my main point on that. Yeah, my pass it.
yeah. I think when you think about stocks again, like what is a market cap? A market cap doesn't actually mean that all of those dollars are in that particular stock, right? Like a market cap is a synthetic figure based on the shares that are trading at the margin and what somebody's willing to pay or buy or sell something for. So like the market cap of the global stock market can go up at a different rate, like an unpegged rate, just because of the design of the stock market. It could go up at an unpegged rate relative to like whatever the money supply is. If people determine that their opportunity cost of capital is best served in the stock market. So I think the world is going to get repriced in Bitcoin from this perspective. I think Preston Pish has mentioned this multiple times. Like PE ratios right now are like the industry or the market average is like 30, and there's going to be a reckoning of like why are people paying for these equities at a 30 PE ratio, and is your opportunity cost of capital better served elsewhere? And when people wake up to the notion of opportunity cost of capital, that could move quickly, it could move slowly, it could happen like over a decade, it could happen in 6 months or 8 months if inflation starts to run away, or if whatever global black swan that we don't see on the horizon happens. So it's just, I guess, something to keep in mind as you think about like just design of markets, right? The stock market is just one place you could park your money, and there are so many other vehicles in the world.
Well, and you got to watch in the rest of the world too, right? I mean, when we all talk and we're talking about stocks and investments and those things, right? We're talking about a very small subset of people that even get to participate in
Right.
markets, right? Which have historically kept you ahead of inflation. But if you come back, down onto Main Street and you start looking at, things like housing, well, how do they keep accounting, or how do they keep propping up housing values? Because you've seen them run away during COVID when everyone found out, oh, I'm trapped in my house, and they just printed a bunch of money. So now the housing prices run away. Well, what do they typically do, right? They lower the restrictions on borrowing that money to get that house, right? I don't think it'll be long before we see 40-year mortgages. They're going to have to.
Oh, yeah. Interesting.
Because people aren't going to be able to get them, and they certainly can't get them at a 20% down anymore, right? So now you're starting to see those same advertisements that crept up right before the last financial collapse with 3% down, 0% down, right? They have to make it so easy for people to get into debt to kind of prop up this picture that even the assets that people want and need, right? Being in houses, there's all this talk about some of these big corporations coming and scooping them up. Well, that's all this wealth, all these real hard assets are getting scooped out of the reach of people. And that's one of the big problems the world's going to face, right? And that's part of the reason why, there's been some really vocal proponents of Bitcoin going, just buy some, because it's one of the few things that are left that has this massive upside potential that anyone can get their hands on now, right? There's no age requirements. There's no credit checks going on. You don't have to give them a personal financial statement of your net worth. You don't have to prove, like, it's this beautiful system where you don't need any of that. It gets you out of that credit system, right? Which is becoming this bubble that's on its own, and all the credit card debt, and people are living, above, well, probably at a normal means, but the wages haven't kept up. And so people are just drowning. And I think that the sooner that message gets out, I mean, I actually personally have a real hard time rooting for the Wall Street involvement. I mean, I like it personally because I think it accelerates that increase in value. But I know the other side of that coin, right? Where it's scooping up that value into that net again, right? And you want there to be this core piece of this that got to the people first. And we'll never know the number of how many people actually own the asset, but it's one of those powerful freeing assets that you can own, and you can own a tiny bit of it. And that's a beautiful thing, right? I mean, you don't have to have a ton of free cash to buy it. You just pick up a little at a time, and you own something now. And that's going to become really important in the future here, when it starts to become this whole, you're just going to have to rent everything from the people that have all that wealth in that net, which I think is dangerous. So, the value proposition is deeper than, the number goes up, which I deeply hope it does. Yeah. But, there's this underlying struggle that's happening that this gives a chance at freedom too. And I think we can't always overlook that when we have these discussions. It's a very important part of it, right? A lot of the influencers have actually been really good, and some people don't like the approach, right? The get off zero crowd, there's a lot of that, but that's real, right? That's what you have to tell people. And one of the things that I've always found when you really believe in something is when you look at who you tell about it, right? If you don't really, when you make
So true.
investments, you don't typically run around going to tell, right? Not financial advice, none of this, right? We have to say that all the time. So you don't run around and tell people to buy the things. Not everyone has that same risk tolerance, but I'd be willing to bet that the people that have really spent the time, right? The people that have taken Saylor's recommendation, have spent 100 hours to understand this, who they tell? They tell all the people they actually care about, right? They're telling parents, they're telling siblings, they're telling close friends. And I think that who you tell matters, right? When you gauge something and its value, because I would never suggest something if I was looking at it thinking there was even a remote possibility this was going to damage someone I really cared about. You don't do that. But you see this huge community of people that have seen the value in this, and that's who they're going out and sending this message to, is the people that they're really trying to protect. And I think that's a really powerful market force out there, because it's driven by, coming from a place of true care. It's not coming from greed. That's a different approach, right? We all want to make, have the wealth on the back end of this, right? But we're hoping that we hold that wealth in Bitcoin and then we come up with ways to use it. But it's just a different approach of getting that message out there. And I think Bitcoin's really the first one that's had that powerful wave that's underpinned by that message versus let's get rich quick, right?
Right.
Because they're not saying buy it and sell it in 3 months. They're saying buy it and hold on to it forever. Right? That's a different message. So
yeah.
It's my philosophical rant on that.
No, I mean, you're so right. I think about the people that I've told about Bitcoin, and it's absolutely everybody that I care about deeply.
Right.
Sometimes I feel crazy about it. And then, in thinking about it from very similar framework, right? This isn't a risky asset. This is a risk off asset. This is almost an insurance policy. Right. This is like coming from my insurance brain. This is almost an insurance policy against anything else bad potentially happening in the world. And you having an alternative asset. I also subscribe to, Markowitz modern portfolio theory, right? I think that's probably a good idea for most people. You could think about having a increased return and reduced risk from having a diversified portfolio and just getting off of zero. So you're so right. Wow. Yeah. Okay. We love Bitcoin. Yeah. We love the orange coin. Let's maybe shift gears, because I know, I know you've got some really good thoughts and some ideas about these, MicroStrategy Orange and decentralized IDs. With your tech background and your infrastructure, knowing how software works and kind of your web development, would love if you can kind of talk through that a little bit, and some of this framework and notion of being able to generate a yield off of your Bitcoin. I mean, decentralized IDs is number one, or is the first product. And then we could talk a little bit about some potential, future products that we think may come out of this.
Yeah. Yeah. And I think it's probably good, because I'm guessing a lot of people that'll watch this will have no idea what MicroStrategy Orange really is.
Yeah.
Other than they'll have heard, DID, right? Decentralized identities. And so I think it's probably a really good topic to cover with MicroStrategy, because that is one of the future applications that they're going to have, and they're already starting to release. So when you look at MicroStrategy Orange and kind of what they announced, right? Everyone heard that they're announcing this, and they showed their demo, and their demo was dealing with Microsoft Outlook, and they're really trying to attack the problem of spam and phishing. And for companies, any company that's ever found themselves the victim of a ransomware attack because an employee got lazy and clicked a link or trusted something that they shouldn't have, they know what the value in that is. And Saylor's really, he used to have this talking point all the time. And earlier he was pitching it to Elon for X, saying that you really needed a way to monetize malice, right? And that's kind of the underlying notion of what he's doing here. But, it's really all about verifying the individual. And starting it in an application like Microsoft Outlook gives the opportunity to spread it wide fast, because most large organizations that you know use Microsoft Outlook, right? It's kind of the underpinning of, it's where all your meetings are scheduled. It's where all your emails are coming in, right? It is high traffic, high volume. Lots of people are using it, which also makes it an attack vector for bad actors. So what DID actually does, you need to kind of think of it as a document about yourself that's out on the blockchain. And so it's in this, the documents in this language, it's called JSON, right? But it's basically just a way that they structure data so you can put different pieces of data in what they call a document that then lives on the blockchain. And kind of the very first thing you do is you create your DID, right? Your digital ID, which is going to give you a public key. And that's going to live on the base blockchain of Bitcoin, right? You don't want to put a ton of information in that one because you don't want to bloat the Bitcoin base layer, right? That's very important. But that's where the main DID is going to live. And that DID would point out to other DIDs that would have your details on them. So a lot of people in Bitcoin understand what layer twos are, right? They see things like the Lightning Network or Liquid. And that's really where some of those documents with more of the details can live. But the real opportunity that I think a lot of people are missing here is you're essentially replacing components of identity and access management for corporations, which is a huge issue for all of them, right? I mean, you've got all these different systems, you've got different authentications that you're using to get into all these systems, right? It can be a real nightmare. And it's also one of those attack vectors where people can start to get in. So what they're doing with MicroStrategy Orange at first is they're using that document as a way to validate the sender, right? So think of it like putting a plugin in Microsoft Outlook that can then go and communicate and get the data from the blockchain, from that DID, that document about this person. It can get that public key and it can get the verification of that, right? They call it resolving the DID, right? And what they're doing, you can think of it kind of like a prompt if you were going to go deep, where you get that notification that pops up on your phone to approve a login somewhere, right? That's what they can do with that down the line. But for now, I'm betting it's just embedded within the organization. But they're using that to sign essentially and put that key in the header of the email. And when they put that key in the header of the email, they can use that document, that digital ID, to verify that this did in fact come from a verified source. So now, you know how some of these organizations will have like a banner if someone from outside the organization sends an email in, right? Some of them started putting that bright red, like don't trust it, right? They're kind of doing that, but they're using it with Bitcoin's network to verify that identity. The real opportunity that starts to happen, what I believe is going to be in the works, is because they already have essentially this platform that they're using for all their business intelligence products. They're going to create that front layer, right? That application layer that you would see the dashboard where you're going to go in and you're going to manage all the decentralized identities within your organization. I think that's what they're creating. They're going to create the front end that people can use very simply, right? To create an ID, to modify it, to add new services to it, right? They're going to give you that one-stop shop to manage this without having to recreate it for yourself. And then on the back end, they'll do all the integrations and the APIs out to those layer twos. So no matter how these corporations decide to interact with these, MicroStrategy can create that one-stop shop. And if you look at the way these can go in the future, right? Think of it as a unified identity. So say, Jeff, you go and create, early on in your life, you're going to create your own digital identity, right? You're going to create your own DID on the Bitcoin network, right? On that base chain. You've now got your base ID, right? That is your digital ID.
Yep.
And you're going to use that to access all the different services that you use, right? You're not going to have a login and a password for every site that you go to. You're going to have a public key that you can sign with a private key, right? And the beauty of how this works is that you can use one public key, or you can create multiple public keys if you want to segment it and say, this one's for my personal, this is the one I'm going to use when I get a job and I'm going to allow them to attach to my email within my corporation. You can have multiple public keys. but you can also have multiple services. And those services point to where they're meant to authenticate. So if it's Spotify, right, there'll be a link in there that sends that request to Spotify saying this one is used to verify the access to Spotify. This is where it's going. So you can start to set up this whole digital identity using just the Bitcoin base layer. And then you'll essentially use these layer twos or side chains or whatever they want to do for the high volume stuff, because you don't want to transact constantly on the base layer because that can get expensive. But you're building this document with the access criteria to all these different applications that you use in your life using one ID, right? A unified ID. That's kind of the big picture. And I'm intentionally trying to keep it to that level because I know if we go too deep, people's eyes will roll back. But that's really the ultimate vision here. And so people look at this and they say, well, Bitcoin's open to everybody. Why would that be of any value? Well, it's the same thing with any software application, right? Every company can go and develop the software application they need themselves. The reason they don't is because, one, they don't have all the expertise to do it. And two, it's a lot faster to get it in use if somebody else has already created and you can just plug right into it. And the beauty of MicroStrategy is they're not starting from ground zero as a startup with a service like this. They already have a customer base. They have a customer base that already uses their products, understands the interface. They know MicroStrategy as a company, right? I mean, I'm sure Ryan met a lot of these people at MicroStrategy World, right? So you have this base of customers that you can start to talk to, and all these things are going to happen through these, small pilot programs, right? Like, let's try it, right? Let's try it with a few, see how it works, right? You're going to get a lot of that, but they already have a core base that they can tap to try to roll that type of a product out. So I think that that's really the big play here, is that it's not just the integration into Outlook. That's the start, because everybody understands Outlook, right? That's a very easy one.
Involved with Outlook. Yeah.
Well, right. It's like they say for all these security budgets, right? For every dollar of budget you get, spend $95 training people not to click on things they shouldn't click on, right? That saves you all the headaches. That's usually people are the weak link in that chain. And it's the constant headache because they're trying to find ways to, block these individuals out. And when companies start interacting with this, right, they can essentially create their own registries of all these digital IDs associated with their organization. So companies can then connect and say, because we interact, I need the ability to look at your registration. So I know that when this is coming in with, at punterjeff.com, that I know that this ID is one that is registered to you. So there's that level of verifying it. And then you have trust between these organizations that are getting these emails. So it's a great place for them to start. And I think it's really just scratching the surface on where they're ultimately going to go here. I think it becomes much broader and it starts to integrate far further into the organizations, including just how you log into your corporate portal, right? Your intranet. Same thing, right? You use the same key. You've got the ability to sign it, right? It gets you into everything you need within that organization, and they can be certain that it's you because you're the only one with the private key. They don't even have it. So
it like simplifies so many. I think even with my corporate infrastructure, right? I've got like a authenticator. I've got a two-factor authentication. I've got to log into my portal. And I got to bounce around like 6 different things before I can even like access information. And like my company might be a more simple one, right? It's not like, highly sensitive organizations that hold maybe medical patient data or Boeing or, any of these other organizations that may take security even like a couple steps further. So, and you start to think about revenue opportunities on something like this as well. And like, I have no idea what a security budget for like, I don't know, Ryan, BMS or like Eli Lilly or Visa or any of these companies. I mean, their security budgets are
huge,
probably massive. Right?
It's basically whatever they ask for these days is kind of it, right? I mean, whenever we were doing budgeting, in these organizations, there would be areas where they would trim. InfoSec was never one of them.
Yeah,
right?
Security.
Security is not one. They're not going to skimp on protecting data, right? They're not going to skimp on protecting, their own networks, right? They're not going to skimp there. And so while they'll be
Man.
slow, right, I'm not expecting this to be an explosive growth in the first year type of a product. It's going to have to get proved out because security is a notoriously slow moving area because you have to be so sure of everything that you're going to put into your own network, right? And so if you're
Yeah.
changing the fundamental way that you're going to authenticate people, that's a big change. And so for them rolling it out here and saying, well, let's just start with your emails, right? This is a huge headache point for you. There's no, CISO that they can go talk to who's going to say, no, no, we're good with that. It's not an issue. It's out of control, right?
Yeah. Yeah.
And it's only out of control because they've been so successful at getting behind the wall doing it.
Right.
So there's a conversation to be had in every boardroom if this proves really effective. And all they really need are one or two case studies to come out of running these pilots with some of these customers saying, hey, we cut down phishing emails by 95%. Is that of
Yeah.
value to you? Yeah, it is.
Yeah. I
Significant
think,
value.
yeah. And again, I'm taking my insurance lens. Cybersecurity is a huge issue. I mean, this is all about cybersecurity, right? And like ransom attacks, um, business interruption, the cost of cyber insurance is really high, and many people are buying as much as they possibly can to protect their companies from these types of attacks. And if you can think about monetizing the cost of decentralized IDs and thinking about how that changes the probability of you having a big ransom loss, then that also may improve the cost of your insurance, your cyber insurance that you have to spend. So you can really see like a wholesale potential solution to maximizing business efficiency, like across the board. Like it's not just fixing email malice, right? It's your company's cybersecurity. It's your expense cost on managing your insurance policy of your whole company. And it's like it's reaching beyond just like a simple component.
Correct. And I think once they set it up and prove it out, part of the benefit here is I don't think it's going to be a hugely expensive service to run, and it's going to fit
Probably not.
squarely into their subscription model, right? So if they start to fold
Mm.
this into their existing products, it might be a nominal add-on in order for them to roll this out. And if there's a low barrier to entry and you basically get to ride your identity and access management on the back of the strongest uncorruptible network in the world, there's a huge benefit to that. I mean, the number of IAM tools that are out there is insane, and it's a really hard thing to manage, right? But if you could go in here and change the access levels, right? You change the services that they have access to right there on the DID from a single portal. If someone gets taken out of the organization, okay, well, you can deactivate that one, right? I mean, it becomes a very clean process. There will be growing pains, obviously, to get
Yeah.
all this built out initially, but the application for corporations is massive. And there's applications for individuals as well, right? I mean,
Yeah.
Saylor's ahead of the game, so unfortunately, he's kind of jumping the normal person and creating a unified ID for one person and going, hey, corporation, you can create these IDs for your employees, right? Which is a good way to do it too. You just do have the ability to consolidate that. And so you could come out of college, already have your own decentralized ID, and then you go to a corporation and that's the same ID you use. They've just got a different key that they're using for it than what you use for your personal stuff, right? So there's an ability to consolidate that and give you one way to manage it without having to, reset your passwords every time you try to log into something you haven't been in a week or two. So, but the corporations is a huge area to start. And I think it's one of the things that really adds, I think it's a net add to the Bitcoin network. I mean, there's going to be a lot of discussion about this, about what you can do with the Bitcoin network versus what you should do with the Bitcoin network. And it's going to be talk about block size and bloat and all this, right? I mean, that's all coming out. But I think that the reason this becomes kind of powerful for Bitcoin, the asset, is when you look at all these other store of values throughout history, right? And we'll use the shiny rocks as an example, right? Part of the reason why everyone says, well, of course this has value because it has all these different uses, right? It can conduct electricity, you can make jewelry out of it, right? You can do all these different things. But there's a reality there where there's this underpinning economy to those assets, right? There's a component of it that's always in motion.
Yeah.
And with Bitcoin, you've got the store of value, which I think is the core value proposition of Bitcoin. I mean,
Number one right
truly,
now. Yeah.
it truly doesn't have to do anything more than that, right? I wouldn't push on that saying it has to do anything more than that. But I think when you have the strongest asset in the world on the strongest network in the world, and then you have this underpinning layer of transaction below it, right? And these are micro transactions, right? Very small, but they can be very high volume and they can be done on layer two. So it's not clogging up the base layer. But I think that just having that provides this secondary level of value where all of a sudden people can't say, well, Bitcoin doesn't have any uses. And you go, well, if it doesn't have any uses, you're going to have to explain why it's the backbone of securing all of the corporate world, right? That's kind of a good use to me,
Yeah.
right? You're using the strongest network to secure your own networks, right? What a beautiful pairing.
Yeah.
So that argument of it has no uses, it doesn't do anything, right? It's just internet magic money. That disappears if all of a sudden it is the underpinning security layer of corporate America. You can't ignore that.
Yeah. Right. And I think I heard somebody say that there could theoretically be 10,000 decentralized IDs per sat, per Satoshi. And
That
so
could
if you
be.
think like, how many Bitcoin does MicroStrategy need to deploy here or like put at work? It's not many. Like, what
Well,
is
and it
it?
might be none
Two?
of theirs, right? What it might be doing is forcing all these other companies to put one in reserve, and that's what's going to be used on their account to
Ah,
manage their decentralized IDs, right? So MicroStrategy kind of becomes
that's a good
essentially
point.
a tiny bank for all these other companies saying, you deposit it with us, we're going to use that. It's going to spin up all your decentralized IDs. It'll pay for any transactions. And by the way, one Bitcoin will carry you forever, right?
Oh, wow.
So
Yeah.
get it cheap while you
That's
can
great.
before so that type of thing, right? I can see those type of economics coming into play. And then if MicroStrategies, taking some fee, right? Maybe they're doing some volume based and maybe they're collecting it in sats and that's accretive to Bitcoin per share if they're collecting these
Right.
fees in sats, right? Once the accounting rules are pretty clear, it becomes less of a challenge. So it opens up a lot of areas for them to expand in ways I don't think people are thinking about right now. I think they just view a legacy company with no growth. But I look at this and go, this has crazy potential for growth, right? It's
Yeah.
such a huge area.
And what's it cost, right? Like, what's it cost to build this? Like four computer engineers? Like
Maybe, right? I mean, you
maybe?
can plug in, right? I mean, there's some pretty good tools out there now for plugging in and starting to do coding on the Bitcoin network, right? So
Yeah.
I, then add in all the AI development tools and everything, right? I mean, getting to a proof of concept is probably quite quick. And I'd be
Yeah.
stunned if they don't already have one, right? Given
Yeah.
they're kind of rolling this out. They've already clearly thought through the management aspects of it and, figuring out the different states you have to create for the ID in case you need to, suspend one so it can't access or whatever you need to do. I'm sure they've thought through that at this point early in the stage, but I don't think it's going to take, and MicroStrategy is not a massive organization by
Yeah.
head count, right?
Yeah. Yeah.
And so I think that, one, they're going to be very attractive for people who want to develop in this space. So getting talent in this area, I don't think is going to be overly difficult for MicroStrategy in particular, right? I mean, they are the gold standard of Bitcoin companies out there at the moment, right? I mean, this is, even though it's just really treasury at this point, it's not anymore, right? Up until now it was. But if you're going to attract the right talent that already really understands this and can develop this, if anyone can do it, it's them, right?
Yeah. So is
And
that
I
you
think they
raising your
have.
hand? Is that you raising your hand for Sailor if you're listening?
I don't know if I'm ready for another corporate job here yet, but if anyone was going to entice me, out of retirement here, it would probably be Sailor, but might have to wait until you got the the Ryan and Jeff, COO, CIO type thing going on over there. And, then maybe I'll have an in. I'll have someone I can call.
Well, I mean, if you believe in the multiple on NAV concept at all, and you look at any equity package of being employed by MicroStrategy, I think it's probably pretty appealing, especially with their ability probably to even compensate employees potentially in the future on Bitcoin. It seems like it would be a no-brainer for anybody looking to kind of build in the space with good skill set. Like they're going to be able to hire the best talent.
Yeah. And people that look at that component of the comp packages want to be early, right? Like getting a job at NVIDIA back when it was down in the $100 range, right? It was a very different. I mean, look at the money some of those people are making on these equity packages right now, right? It's crazy. I've seen some posts out there about people clearing, 10, $15 million that were in entry level jobs when they started there, right?
Right.
Well, if MicroStrategy has that same type of trajectory here, that's a huge plus to be working there, if that's even a component, and if they're going to, use those options awards or RSUs or whatever on any component of their business, it would probably be in the Bitcoin development area because that's where the
Right.
future is. They've been pretty clear about that.
Right. Right. Wow. I mean, you gotta again shatter your reality because it's changing, right? Like the world as you know and it could change without most people really knowing it, right? Like
Right.
as a corporate employee, you might just show up one day and it's like, oh, I've got an orange check mark next to my name. And you might even, they probably need to tell you that you have a decentralized ID. Like maybe there's like some sort of law about that. Maybe not. Who knows? But like one day you might just show up and have an orange check mark and it's like, all right, cool.
It could be a lot of people's first introduction to it, right? I mean,
Yeah.
we in our echo chamber think everybody's heard about Bitcoin by now, right? Because we feel like we've been obnoxiously evangelizing it out to the world. But, the reality is most people still have no idea, right? I mean, they've probably seen headlines. It's been all over the news, right? If they're watching any of the TV channels, you've probably seen it now. If you go to the airport, Grayscale's been in there, trying to get you to buy GBTC again, right? So, they've probably had exposure to it, but this could be their first real exposure to it, doing something other than being a speculative asset, right? Which is what they would know it as now. Now it's a part of their daily lives. It's a different mindset there.
Yeah. Right. Wow. Wow, that's a lot there. I think on this ID topic, I do this conversation with Andrew Hones at Battery Finance and New Market Capital yesterday, and he was talking about this idea of just kind of manufactured scarcity, and there's scarcity everywhere around in the world. And thinking he gave this example of a country club, and I thought this was an interesting example, right? Country clubs are exclusive. They generally let a certain amount of people in, and there are requirements to be able to get in. Some of them are, you pay X amount of money, and then as initiation fee, and then you pay monthly over time. And he imagined this world where you have an RFID card, and maybe it's got that connected to your decentralized ID. And let's say you have to own 10 Bitcoin in order to belong to this country club. And this country club has golf and pool and tennis courts, and it's an exclusive club in your neighborhood, and you're a well-off family and you want access to all of these services for your family, but you only have 8 Bitcoin and you need 10 Bitcoin to get in. And 2 more Bitcoin costs $2 million. You may be willing to borrow those 2 Bitcoin for a specified rate in order to add that to your decentralized ID or your ID, so the gates can open when you go to the country club. So you drive up to your car, you've now got 8 Bitcoin that you own, you borrow 2 so you can access this experience for you and your family. And that's just a single example, but a microcosm of what can be utilized across the globe in many different examples, whether that be like public transportation or getting on an airplane or entering a certain country or whatever that might be. I think it's worth considering that again, shatter your reality, because like this is a possibility and probably highly likely at some point in the future. So
Yeah, I don't think we have any concept of how wide this can go out in society, right? And as the uses develop here, right? I mean, borrowing and lending, right? There's a sour taste in everybody's mouth at the moment, right? I'm sure people shudder the minute they hear anything about lending their Bitcoin, and rightfully so, right? I mean, obviously, we've gone through a period where you've got to shake the trees and find out what's in them, right? And unfortunately, there was a lot of rotten apples up there. So, but now that that's clearing out and you're starting to get really these mainstream institutions in that have to evolve with the rest of the world, you're going to have a much more sophisticated approach coming to this, right? Which might not be what some people want, but I do believe it's good for the growth of the ecosystem, right? And so using some of that rigor that's been built up over decades here in terms of how to, secure the assets in transit essentially and make sure that, they don't just get to keep them, right? You think about something like an Unchained or all these people that are doing
custody solutions.
custody solutions, right? I think those are going to start to play. Like you could have a bank that gets a key, an insurance company that holds a key, and an individual that holds a key, right? And when you're lending, that can kind of be the way that it works. It's a 2 or 3, right? And you could start having setups like that happening out there that makes it more secure to be able to do that type of lending, to lend it to somebody else. You'll have the peer-to-peer lending. Obviously, that'll pop up. But with every strong asset, there's always a desire to borrow it. And I don't know what all the use cases are yet for borrowing the Bitcoin, right? Right now we look at it and go, I need to get a car, but I don't want to sell my Bitcoin, right? Can I borrow against it? And yes, and there are still some lenders that are out there that weathered that storm, that we're not doing all the heavy rehypothecation, that we're stable. Right. But trust takes time. And we're not far enough away from the last one. I think a lot of people are real hesitant to give up any control of that. But those multi-sig solutions, I think, open that world up. And that's just going to be, I think, like you said, it's mind-blowing, right? It stretches your perception of what this asset is and what it can do, because people hear Bitcoin, they think the coin, right? The digital asset, they don't understand the network component of it at all.
Yeah, the custody is so far ahead of where I really thought it was.
Yeah.
And it is one of the most it is one of the most developed parts of Bitcoin, that, and with a ton of room to continue to grow. And like you said, multi-sig and multi-key, right? Like if you think about my phone, it's my phone. Like I hold it and I have custody of it, and we can't both hold it at the same time. But with Bitcoin, you can have multiple people custody the same asset at the same time, such that one person can't do something with it. Like it has to get consensus of all of the people that hold the custody of that asset, and starting to think about that. And that's just like code. That's literally just, you can create and develop code to have multiple different layers of custody with like time locks. Like if somebody dies, you can have rules set up such that, it's got to go, you got to wait 6 months before anybody can do anything. So that you have this kind of like period of time. There's so many different things that can be done. And I think that the future of lending is going to be a lot more palatable. Yet there are going to be more bad issues that happen in the future, for sure. I mean, there's bad actors everywhere. People are going to get burnt, and it's going to leave a bad taste in people's mouths. But like, in order to develop an economy, like you need to try and experience and like experiment with different transaction types, right?
And the solutions are going to evolve, right? I mean, Bitcoin was really born out of that cypherpunk movement, right? So everything was done with maximum security, but it was being done by people that understood the inner workings of all the tech, right? So all the solutions that came out, right, they weren't always very user friendly. And I think that if you got somebody that comes in and says, okay, I'm going to buy $1 million worth of Bitcoin, but what you're telling me is if I lose this and I lose these 12 words, my $1 million is just gone, right? But for a lot of people, that's a tough pill to swallow. So there's going to be solutions that come out that find ways to make that much more frictionless, right, for people. Now, there's always going to be some component of it. You have to have it, right? I mean, that's the only reason you truly own it yourself. You can bring it with you anywhere in the world, right? Just by remembering that seed phrase, right? I mean, there's so many benefits to that. But when it gets into mainstream, and particularly if it's not a huge amount, there's going to need to be more user-friendly experiences out there where they are going to take, something like your phone, and they're going to have to integrate, some of the signing through there, right? Right now we've got our hardware wallets, and those are fun, love to play with them, but you have your phone with you every day, and your phone uses something like biometrics as another level of security to verify that it's you. And so one of the things that was with the decentralized identities is when they're doing that resolving period of validating that public key, one of the things they can do is they could have it prompt onto your phone where you can approve it from your phone. And that makes it a very normal, like that your private key stored in there, and it makes it a normal user experience. Now you've got the security concerns around the phone and the private, there's a lot of things to solve, but as these things evolve, they'll get better and better, and that's going to make it easier and easier to integrate into everyday life, right? So it's a bright future, and it's going to be fascinating, I think, just in the next 3 years to see this really take off, because it's got people's attention now. And with that attention comes the resources to help build out that infrastructure that's going to really bring this thing center stage.
Right. Ryan, you got anything you wanna add on the DID topic? Or I mean, this has been a fascinating conversation. I mean, it's incredible.
I mean, look, I love what's been said so far. I've not much like specific comments on anything so far, but the one thing I will add is that coming out of MSTR world, there was a lot of pushback on the idea of MicroStrategy Orange and DIDs, and it went full into the inscription model as this being like a bad thing for Bitcoin. It went into the ordinal concept as this being bad for Bitcoin. To be honest with you, I almost just want to punt here, as in punter Jeff, because like me myself right now, I actually don't know enough to like talk on the topic. I was talking with Dylan LeClaire the one night at the casino actually, and we were going back and forth on talking about like just the perception of ordinals, and like, is this like a actual non-monetary transaction, or are non-monetary transactions like good or bad for the Bitcoin network? And I think there's a much broader conversation to be had there. I'm not ready to have that conversation right now. So with that being said, I can actually pass it back to Jeff.
Yeah.
I think just one thing on that. I think that's an important point, and there was an immediate outcry against it.
Immediate,
right?
if
Immediate.
Yeah, immediate.
And I'm not going to pretend that, this is all going to be golden for the Bitcoin network either, right? I mean, there's a lot of work that's going to need to be done before they just start throwing data onto the base chain and, right, really blowing that up. I think that's a real problem that needs to be solved. And I think that it's going to have to advance into using those side chains or layer twos and figuring out what is the right level of data that you could put on the base chain, data that really needs the security of that network, right? What do you decide belongs there versus what can go out onto a side chain, a layer two, right? Something meant to be highly transactional that might just check in to the base chain every once in a while to confirm things, right? Like, I think that's really where the solutions are going. I don't believe that the solution is we're just going to go throw all the decentralized IDs and then we're going to fill those DIDs with data, right? And we're going to do that all on the base chain. I couldn't imagine a world where that's how they're launching MicroStrategy Orange. At least I hope not. But there's a lot of people out there. It'd be really interesting for you guys to get one of those people doing development in that area on here to talk about that and what the ultimate impacts are, because that's a very important consideration when they're rolling these out, right? It's what can you do versus what should you do. And we're too early in the stage to necessarily say what the right thing is and how we can control it yet. So while it's a fascinating concept, it has huge implications, it has huge applications. I think that it's one that needs to be approached with caution still until we really flush that out, right? I mean, you've got to do the stress testing to figure out what this is ultimately going to mean. But I think it's also a benefit to having, and you hate to say there's a benefit to having a central authority when we're talking about Bitcoin, but having some centralized solution like a MicroStrategy Orange that flushes that all out ahead of time, determines what is the right balance, hopefully gets buy-in from the broader community. Maybe you talk to the core devs, right? However they do it, to figure out that balance and then make sure that everyone else isn't just running wild and just throwing data on here, not understanding the implications to the ecosystem as a whole, right? You have to balance that. And I'm sure someone like Saylor, who's as invested in this as he is, there's just no way that I can believe that he's going to do something that he thinks is going to risk the network that he is building his legacy on entirely. So I hope he's doing the right thing. I believe he is, to figure this out, to do the proof of concepts, to talk to the right people that are deep in the technical weeds, to talk to the core developers, to figure out what is that balance, what can we do, what should we do.
Well, it's also a cost-effective thing, right? I mean, this is like a classic free market situation where, like, if it costs too much in transaction fees to put too much data on the main chain, then the cost benefit analysis doesn't make sense. So let's figure out how do we minimize the cost associated with putting data on the Bitcoin network, and it's probably a function of a bunch of ones and zeros, and then having data sit on a side chain somewhere that doesn't bloat up the blockchain and cost a bunch, where you can have infinite, pings and transactions on the internet somewhere else, with one single reference to the main chain, like at any given time. Yeah, I mean, I need to take some software classes or something. I
Yeah.
I need to start going to BitDevs meetups. Yeah.
Yep. But give it 6 months, right? And I think this is going to be a very real conversation for people when they're, to tie it back to MicroStrategy and the valuation, right? There's going to have to come a time here where they're going to have to start putting numbers to what does a service like this bring and what is that future potential. And that changes the discussion, because you could no longer, have your line in the sand being, well, 1 times NAV is the true value. Well, that's not how you value these types of things, right? So
Right.
it's going to be real interesting to see when people start poking under the hood and when they finally have something to release, or they release a client or a customer that's willing to go public with them, how the market responds to that information and how that changes the way that we see the stock trading, right? Which is what we're going to be interested in ultimately.
Yeah, I think you brought up a really good point earlier in the day too, that they've got existing customers. And if this is a bolt-on product, maybe they offer it for free for the first couple people where they're, testing it. It's a pilot project. And they've got this BI software. If any other corporation in the world is reevaluating their BI software and they can get this additional DID thrown in for free or a similar cost, or, whatever the structure may be, or for a nominal increase in cost, I think that also makes the value of their underlying software product significantly higher, if it's offered as a package deal, which I would assume would probably be offered in that format, which is an interesting business structure.
If we want to go mega bull here, right? I mean, why not? That's what we do here. So
we're Quant Bros. We're going mega
that's
bull,
right.
like
That's
all
right.
gas, no brakes.
Let's say that they come out with a partnership with Microsoft. Let's say it's directly endorsed by Microsoft and they're going to integrate this directly in, and they'll use MicroStrategy is kind of the orchestrator behind the scenes for how to implement this, right? What happens if they do that? How do you, I mean,
How
that
many people
changes
use
things
Outlook?
overnight, right? If they say this is just a core part of Outlook now because it's been proven to ward out 99, 5, 6 nines, whatever, of malicious attacks or phishing emails or spam. I mean, what if it performs that well, right? And this is all hypothetical, right? But what if that comes out and they strike up this relationship with Microsoft and Microsoft says, we don't want you to give this to Google, so we're going to sign up a partnership with you and we're going to integrate this directly into the offering, not as a bolt-on. We'll build it right in. Seamless experience.
Now you're getting into game theory.
That's right.
This is
Well,
getting fun.
exactly.
Yeah. Because it's,
so what are we at then? An
right.
1100 multiple on NAV? I don't know.
Do you want to go back to the chart? That's funny. Oh my God, you're so right, because it does get into a game theory situation where any other email provider like Gmail or anybody else would want to be the first mover and have exclusive rights to this, because then that just makes their business even stickier than it would have been in. Oh my God, that's
Well, and here's the other side of it, right? And I learned this firsthand, being behind the scenes. But what a lot of these companies do when they have a product like this that they've started to prove out, what you do is you go to the consulting communities, because what the consulting communities are going to want to do is they're going to want to stand up services to go in and do the due diligence for these companies, to set up all the project plans for how to roll this out, to look at what systems you should roll it out in first, right? They essentially can become your marketing campaign because they're incentivized to take a new offering out to market that they can sell a service on, that they can try to be the leaders in, right? I mean, so when it starts getting into the professional communities like that, the consulting groups are in every major organization in the world.
right.
And if
Right.
they see success from one engagement, if MicroStrategy brings in a big player as an implementation partner on this to help get it rolling, that company is going to go to every client they can and say, look what we did, right? And they're going to go start evangelizing this out. So, I mean, I like to go down the rabbit holes because you love to do the what ifs, right? Because man, if even one of them hits, you hit zero on the roulette wheel. I'm sure Ryan tried a few times in Vegas, but you like to dream a little. So, but that's a real possibility where you start using those communities to start getting the word out if you have that success. But that's going to take 6 months, a year, right? I mean, I don't know what the timing is. I don't think it's a this year, maybe even next year thing. But if they start getting traction, watch out, because all those consulting firms have digital asset groups already that are out doing consulting for these organizations. And so if this is now a service built on the digital assets, look out. They'll be out there.
Oh my God.
And it gets pushed, right? You need it to be pushed. People might be hesitant to pull it in, but if the people they know and trust are the ones telling them about it, it's a different conversation. So
right.
We can add that to the bull case.
Yeah. I mean, Ryan, add that to the flywheel. That is one for the flywheel theory. I just want to put out there, MicroStrategy right now is the market cap is less than Tractor Supply. So if that makes you bullish, this conversation and talking about what like the potential digital future, like
says we've got some work to do. Yeah.
there's a lot of blue sky ahead, right? I mean,
well, I love seeing that post because you get so many of those companies you've never even heard of.
Like,
going, where did this come from, and why is it worth $30 billion?
Yeah. Wow. I don't even know how long we've been talking, but we should. I want to hit on one more topic with you while we've got you. Q1 earnings came out, right? They didn't adopt FASB, which a bunch of people were disappointed. I thought I was going to buy some of the last shares before pre-FASB, which is just, oh darn, I bought more MicroStrategy shares. Like I'm not upset. But everybody did think that FASB would potentially be adopted. Does sound like there's some potential concerns, not concerns, but it seems like they want some clarification around corporate alternative minimum tax. Potentially, I think that is a topic that they've brought up in past earnings calls. And in thinking through the potential future of FASB adoption, in game theorying the whole situation, adopting FASB is effectively like a lever at the moment to get included in the S&P 500. So right now they hit all of the categories in order to be included in the S&P 500, with the exception of earnings. I don't know if many people watched Mara, but Mara got included in the S&P 600, which is a much smaller index, because they adopted FASB earnings. And that adoption of FASB earnings made it so the prior 4 quarters, or the sum of the prior 4 quarters earnings, was greater than 0. And that made them qualified for the S&P 600. S&P 600 has the exact same criteria. It's just a different market cap size. So that FASB lever has now established precedent for a company being included in the S&P 600 with Mara. And MicroStrategy now has that same lever to pull to potentially get included in the S&P 500. Now, if you think about the strategy here, you've got one shot at making it into the S&P 500. You've got one shot at getting included, because once you're included, then it's a function of whatever your market cap is, and that's the function of the future dollars that you get in the index. In thinking through the game theory, it probably makes sense to pull that lever at a certain component, or at a certain time when MicroStrategy market cap is at a certain level, in order to maximize their potential value of the new dollars in getting included in the index. So in thinking through that, right, they just got added to the MSCI index. I think they get added at the end of the month. If their market cap is above 36 billion in December, then they get added to QQQ, which is the NASDAQ 100, which is the 5th largest ETF in the US, or in the globe. And then at that point, if the market cap is still greater than 14 billion, and they have FASB earnings adoption in 2025, then they would qualify for the 2025 inclusion in the S&P 500, which ideally, that gives us that gives MicroStrategy 9-10 months in order to increase their market cap with the underlying Bitcoin value, and get a potential for the highest possible inclusion market cap in the S&P 500 to continue this continual flywheel of financial strength and being able to issue more shares, or raise convertible debt, or whatever that may be. So Ben, I know you had some thoughts on this. What do you think?
Yeah, well, and I think something that you said earlier, I think it was before we were actually on this, but when you had mentioned the timing from the halving to kind of the peaks of those cycles and how much time that took, I think that was really interesting because, yes, they didn't adopt in Q1, which means now if they adopt at all in 2024, they've got to go retroactive to Q1, right? They basically got to restate their earnings back to the beginning of the year as if they had adopted it. And so the timing of that could be interesting, because I think what you were showing on here, and I'll let you talk to it here in just a minute, was that it was somewhere around September, October is when that peak hit. So if they could, if that value builds, if that market cap builds on a run up from Bitcoin where they would enter at a very high level, if it's opportunistic, you could see them pull that lever yet this year. They could pull it at the end of Q3 if they wanted to, if they really thought that was going to launch them here into the S&P 500. If they're going to be, top 50, say it really goes nuts here, what a launching point if they can pull that lever, get that 4 quarters of profitability out there. I mean, timing could be everything here. So I'll stop and let you run through this here a second so you can show what the actual numbers are. Yeah.
So for those that are just listening, I apologize. But if you're watching the video still, thank you for being here, because we're deep. But what we've got here is a historical analysis of the Bitcoin price, and it's a summary. So I've got 3 separate columns, being 3 separate Bitcoin epochs. So I've got the 2012 halving in the first column, this column M here. the 2016 halving in column N and the 2020 halving in column O. So this highlighted row is T equals 0. So this represents the price of Bitcoin at the Bitcoin halving. Each individual row above this is the end of the month price of Bitcoin, 1 month after the halving, 2 months after the halving, 3 months after the halving. So you can see how the price of Bitcoin has moved relative to the halving events. So it kind of pulls out some of the noise of, you know, the up and down volatility, and tries to directionally look at where Bitcoin goes after the halving events. So it gives you some visual perspective of supply shock. So again, T equals 0 is our baseline here, and anything that's positive in this table is months before the halving. Anything that's negative is months above the halving. And as you can see visually here, this is percent change from the Bitcoin halving price. So we really don't see Bitcoin taking off until 7 to 14 months after the halving events is when the price of Bitcoin historically has taken off, and that could be for a multitude of different reasons, whether that be miners that are selling to finance their operations in order to be able to continue operating, or buy infrastructure for new miners, or whether that be trading, sell the news events on halving, whatever it may be. There's a multitude of different things that may impact this supply shock delay. I don't agree with Fred Krueger that the halving doesn't matter. I think the halving absolutely matters, and I think this visually shows that. So, I think it's helpful to kind of zoom out and look at what's happened historically. And we're at May 23rd. We're 1 month after the 2024 halving. If you look at where the price of Bitcoin was historically 1 month after the Bitcoin halving, in the last cycle, you were 3% below the price at the halving. Prior to that, you were 8% below. Prior to that, you were only 7% above. So don't freak out. This is not financial advice, but there's plenty of time here. And we're likely going to see some significant volatility, I think, within the future. But don't be surprised if we're in a bull crab market for the next 4 months or 6 months. And all of a sudden, you just when everybody is going to think Bitcoin is dead, it's going to surprise us and go to $200,000 or whatever that might be. And Ryan, I think you alluded to some historical volatility, right, in September, October. You might want to bring that up.
Yeah, no, I was just talking about we were talking about entering some type of trade perhaps after September, October, I believe. But the point here was that 2 of the highest months of S&P 500 volatility going back, 50 years through 1970 has been September and October. There are many reasons for that, actually dating back to like when the farmers have to sell their crops in terms of the futures market. Like this seasonal volatility actually started 40, 50 years ago because of actual like functional utilitarian farmer type futures market activity. But it's continued onward since then. Part of that has of course been, and the kurtosis, like hardcore data science nerds who want to talk about things like kurtosis, sure, most of the kurtosis can be explained by the 2008 rip upwards in the VIX in volatility, when the VIX went from 20 in August of 2008 to 96 by the end of October 2008. Yes, of course, that pulls most of the kurtosis, but many years since 2008, we've also seen this seasonal volatility pattern of increased S&P volatility occur. Is that going to happen this year? Who knows? None of us know. I know I myself have been talking quite a bit about the impact of the presidential election cycle, which I think is massive, which I think is something that all these like doomer like bears, if I may talk about for a second, like at Great Martis and some of these other folks who want to pull up a chart of like Nvidia and Cisco in 1999, 2000, and like run some like very super basic overlay between the two and be like, oh, look, this is what's about to happen now, are so massively just missing the point. Um, but yeah, no, other than that stuff, I think there might be like some seasonal volatility that we could expect just only from like the regular expected seasonal volatility, schedule, so to speak. But I also think the presidential election cycle is massively huge because when we look at 2000 and 2008, and those were the two big crises. In 2000, Bill Clinton was out either way. It really didn't matter like what happened in the coming like couple years. Fast forward in 2008, George Bush was out either way. It didn't really matter what happened in like the next couple coming years. However, this presidential election cycle is distinctly different from both of those because the incumbent party, not just the incumbent president, but the incumbent party has like a massive vested interest in like continuing their, inclusion, and they have a massive vested interest in staying in the White House. I'll say it like that. So
Controlling
yeah,
the money printer.
Right.
so yeah, I mean that's one of the things. But yeah, so them staying in the White House is big. So we could of course have some seasonal, September, October, volatility in the S&P 500. I don't know to what extent that'll affect the price of Bitcoin, especially because, again, this presidential election cycle is distinctly different than what all the doomers want to say about 2000 and 2008, because that president and his party both kind of knowingly well knew they were out. Not just the candidate, right? Like not just the not just Bill Clinton or George W. Bush being out of office, but that there was going to be a switch and it went from Democrat to Republican and then Republican to Democrat, right? 2000, it switched from Clinton to George W. Bush, Democrat to Republican, and then 2008, 2012, it switched from Republican to Democrat, from George W. Bush to Bill Clinton to Obama. Sorry, I'm getting mixed up here, but yeah, so we might see that degree of like seasonal volatility. It's nothing we can essentially like write in stone and be like, this is gonna happen. So I'm either gonna not buy risk assets or I'm gonna like buy puts on like these certain dates because that stuff tends to not work out either. But yeah, let me pass it back to you here, Jeff.
No, it's I mean, it's such a good point. I mean, I think there's some stat like, I think there's every president, I think prior to this last presidential race, every president has served 2 terms since like the 70s,
Most of them have, yeah.
or like this, it might even be longer. I remember when I heard the stat, I was like, wow, that seems like that seems way too long. But you go back and look, it's a long time. Every president prior to this last presidential election has served 2 terms in a row, which is pretty incredible. But I mean, the other point is going into the next couple of months, we're looking at a period where interest rates haven't changed, and there's likely reduced interest rates on the horizon to assist with the presidential election, right? Money is, I mean, I talk to my friends about money like loosely all the time, and money is just hard right now. Everybody's working really hard. everybody's feeling pinched in some sort of way. And I mean, that's certainly not how you want voters to feel going into an election. So I would assume there's going to be some kind of foot off the gas pedal to some regard to make money feel a little bit easier at some point in the future. And that's probably, I think it's probably September, but it could be a little bit earlier.
Yeah, money's definitely going to ease, right? I mean, that's pretty clear. And you saw it already. I think it was today or yesterday when they announced the student loan forgiveness again, right? I mean, they're trying to do the things that are going to trickle down, but watching rates, while they're going to say that they're not aligned politically and, they operate independent from the administration, we all know the reality, right? And the pressure is going to be there.
Yeah.
And we know the rates aren't going up, can't afford it, right? But they also can't bring them down a lot. So they're going to probably delay, but it might be right before that election cycle that you see it tick down, right? To try to start stimulating things again. So it's in a real catch-22 right now, and we're gonna see what direction they go.
Yeah, it'll be a crazy 6 months for sure. For sure. Anything, maybe we end on one thing, Ben. I mean, what are you most excited about, whether that be MicroStrategy related, Bitcoin related? What are you most excited about in the next 6 months? And what gets you waking up to go do whatever you do every day?
It's those two things, right? I mean, Bitcoin and MicroStrategy. I mean, I found Bitcoin a long time ago, and I've been focused on it, probably obnoxiously so to some of those around me, for a very long time. And it's one of those things that I look at, and I kind of believe everyone gets one or two chances in their life to be at the early side of something brand new. And for me, I think that's Bitcoin, right? And so it's one of the most exciting spaces to me. I love to watch the development, the new products that get launched along with it, the new applications people find for it. And then MicroStrategy being an extension of that, right? I mean, it's the first real large scale case study in the corporate world of the adoption. So you can't help, if you're interested in the space, but be totally invested in watching this and analyzing this, right? And we might microanalyze it like crazy, but it's a ton of fun. It's an area that I'm obviously super bullish in. It's one of the few things out there that I find that I really enjoy spending this amount of time on. So bullish Bitcoin, bullish MicroStrategy, right? I'm here for the ride, so we'll see where it takes us.
I love it. Well, if you don't follow Ben Werkman, go give him a follow. He's putting out incredible long form work. It's a blast to read, and you're at the forefront of what's going on. So I love the perspective. Keep up the work. Everybody appreciates it. I think this format was also great, and please give us feedback if there's anybody else that you want to hear us talk to or have a conversation. Ben, we're super glad you've gone from anonymous to non-anonymous, and we're excited to have you on here in the future as well.
I appreciate you guys. Thank you for having me. It's an honor to be the first guest.
Yeah. Ryan, anything else you want to add?
Yeah, I mean, let's just take a step back and look like holistically where we're at, right? We just walked through the halving cycle and what the price appreciation looks like after the point of the halving. That's number one. Number two, the M2 level, I don't know if it's the change over change numbers or just the actual increase in M2 has just recently flipped positive. I do not think that's, a coincidence or unintentional. I think that's more part of the presidential election cycle, which again, the stakes are very high. So those are two things. Number three, interest rates have not gone down yet. Again, I don't think we're going to zero because that would require an actual recession, which would require an actual banking failure. Which, by the way, on a separate note, that's what the macro recession bears got wrong for 2 years now, is they kept calling for this recession, being like, things are bad, things are bad, things are bad, which it's like, yeah, we know things are bad. But a real recession doesn't occur unless there's like a credit failure within banks, within institutional JP Morgan, Morgan Stanley, Bank of America, Citigroup, institutional Wall Street banks. Unless there's like a cataclysmic failure within them, then you really cannot get the VIX over 80. You know what I mean? Like
without backup, right? Like a failure that's not also bailed out.
Right.
But I'm not even at where you're at. I get what you're saying.
Yeah.
But I'm saying, like, I don't even think we're at the failure point. Like there has to be like a smoking gun a la 2008 when Lehman Brothers, Dick Fold, the CEO of Lehman Brothers, was levered up 44 times to 1 on mortgage-backed securities, meaning he was borrowing $44 for every $1 that Lehman Brothers had on their MBS position. That is something that could lead to like a cataclysmic like failure of the banking system. So that's what like the bears have not gotten right. So again, just to bring this back, because I know we're wrapping up here. Number one, the first thing I was saying in this mini monologue right here was, think about where we're at in the halving cycle. We're only like 1 month like post-halving, with typically it's a range, but it's typically the 12 to 18 months post-halving that are the most intense for Bitcoin's like price appreciation. That's number one. Number two, M2 just flipped up, which is kind of a big deal, right? For those who have been I see Ben nodding his head, for those who have been like following macroeconomics for the past several years, like 2022 was a very dicey year where we thought like, you know, M2 would never go higher and the Fed's going to be aggressive in all these different ways and we're never going to print money and all this other stuff. But now we come to a point where we're like, no, M2 is actually going higher. So that's number two. And then number three, interest rates have not yet gone lower. And real quick on that, a point as to why interest rates are relevant. That is the cost of capital, both for companies and for individual investors. So in a scenario in which interest rates are very high, that makes stocks just inherently less valuable, because the barrier to entry, meaning like the line of success, is much higher, given that bonds, government bonds, because interest rates are high, government bonds can pay you a higher yield. Hence, that makes like, you know, government bonds like more attractive. Plus, on the company level, it makes the cost of capital much higher. So all of their borrowing activity, whether it's to do like stock buybacks, which I know we're going to talk about more on this show, but whether it's to do like stock buybacks or hire people or build a factory or do like any of this other stuff, that barrier to just borrow capital is now like so much higher. Okay, so again, I'm wrapping here. Point one, where we're at in the Bitcoin halving cycle. Point two, M2, how we're seeing that start to flip up now. Point three, interest rates have not gone down yet. At the point in which, because look, I was super like bearish, like November 2021, December 2021, when Jerome Powell said like, hey, we should like drop the whole word transitory right here. We should like delete that from our vocabulary. I was like, oh my God. Like, are we about to like live through the depression here? But now, right, that was then. That was like almost 3 years ago. That was then. But now we're on the precipice of the opposite, where there could be a slow decline of interest rates. Instead of going from a zero base of interest rates in November 2021, when Bitcoin peaked the first time, instead of going from a zero interest rate to, you know, 500 basis points, we're going to go from 500 basis points to 475, and then to 450, and then to 425. Hopefully not in a rush, but that's the direction we're going to go. So we have the M2 cycle going up as like we're at the point in which interest rates are probably going to go down. Those are my closing statements for the episode. Those 3 points.
So why is Ryan? Yeah, you nailed it. Why is Ryan bullish? Bingo. Yeah, I mean that's you nailed it. You nailed it. That's all positive catalysts. All of those, and they all work kind of in conjunction with each other, and they all make money a little bit easier. So that probably helps with any voter pressure on the presidential. And you got a presidential election coming up, so there's incentive to do all of those things. There's
Take that
incentive.
easy money, move it to something hard, and
Yeah.
make sure you can weather the next storm. They always come around.
Yeah, exactly. Awesome. Well, this has been a ton of fun. Thank you for the time. I know it's late on the East Coast, and it went from like light here to dark. So yeah, we've even got late our time. So appreciate the time. I'm sure we'll have you on again in the future, and we look forward to interacting with you on X and X. Right? It's just called X now. All
Awesome.
right.
Appreciate it, guys. It's been fun.
Yeah. Thanks, everyone. Appreciate it. See you later.